Welcome back to the channel, where we dive deep into the latest trends, insights, and analysis on all things crypto. In today's video, we're focusing on one of the most talked about topics in finance, Bitcoin. From its current state in the market to the broader trends shaping the cryptocurrency space, and even the potential impact of upcoming US elections on Bitcoin's price and adoption, we'll cover it all. We'll also take a look into the future and explore the key trends that could shape Bitcoin and the entire cryptocurrency landscape. So, whether you're a crypto veteran or a newcomer looking to understand Bitcoin's role in the evolving financial ecosystem, sit back and let's get started. The current state of Bitcoin. Bitcoin has come a long way since it was introduced in 2009 by the mysterious figure known as Satoshi Nakamoto. As of now, Bitcoin is considered the gold standard of cryptocurrency. However, it's not without its challenges and complexities. Currently, Bitcoin's price is known for its volatility, but over the years, it has gained immense popularity as both a store of value and a speculative asset. As of insert date, Bitcoin is trading around the SAR amount range, showing a mix of resilience and caution among investors. A key characteristic of Bitcoin is its limited supply. With only 21 million Bitcoins that will ever be mined, this scarcity continues to drive its value over time. As of today, about 19 million Bitcoins have been mined, meaning we're getting closer to the cap, which many believe will trigger a significant rise in Bitcoin's value due to increasing demand and limited supply. Another factor worth mentioning is the increased institutional interest in Bitcoin. Companies like Tesla, MicroStrategy, and even some traditional financial institutions have been incorporating Bitcoin into their portfolios. This institutional involvement is providing legitimacy to Bitcoin as a serious asset class. However, these companies' decisions are closely tied to Bitcoin's market fluctuations, meaning the overall sentiment can swing based on broader economic trends. On the regulation front, Bitcoin is walking a fine line. Governments around the world are adopting varying stances on cryptocurrencies, and Bitcoin is frequently at the center of these debates. Countries like El Salvador have gone as far as adopting Bitcoin as legal tender, while others, like China, have imposed strict regulations and bans on crypto mining and trading. In the United States, regulatory clarity is still developing. The Securities and Exchange Commission, or SEC, continues to wrestle with whether Bitcoin should be classified as a security, commodity, or something else entirely. Any new regulations will impact not only Bitcoin's price, but also how institutions and individual investors treat it as part of their financial strategies. Cryptocurrency trends. Now, let's zoom out a bit to look at the overall trends shaping the cryptocurrency space, because while Bitcoin remains the dominant player, the broader cryptocurrency market is evolving rapidly. First and foremost, the rise of DeFi, or decentralized finance, has been a game changer. DeFi platforms offer services like lending, borrowing, and trading, but without the need for traditional financial intermediaries like banks. This has led to a surge in interest in Ethereum, which supports most DeFi applications, but it's also having a spillover effect on Bitcoin. Many investors see Bitcoin as the gateway into the broader DeFi ecosystem. We're also seeing the emergence of Layer 2 scaling solutions for Bitcoin, such as the Lightning Network. This network aims to solve Bitcoin's scalability issues, allowing for faster and cheaper transactions. These innovations are making Bitcoin more practical for everyday use cases, not just as a store of value or a speculative asset. Another important trend is the growing focus on environmental sustainability. Bitcoin's proof-of-work consensus mechanism, which requires miners to solve complex puzzles to validate transactions, has come under fire for its environmental impact. Crypto miners, especially in regions with access to cheap electricity, have been criticized for consuming vast amounts of energy. As a result, there's been a push for more eco-friendly alternatives, both within Bitcoin's infrastructure and across the broader cryptocurrency landscape. Projects like Ethereum's shift to proof-of-stake serve as one example of how the industry is adapting to these environmental concerns, and similar conversations are happening around Bitcoin mining. Let's not forget about the rise of stablecoins, which are pegged to traditional assets like the US dollar. While Bitcoin fluctuates wildly, stablecoins offer a less volatile option for those wanting exposure to the benefits of blockchain without the risks. However, stablecoins are also facing increased regulatory scrutiny, and how these regulations unfold could have an impact on Bitcoin as well, particularly in how it is perceived relative to other crypto assets. Lastly, we need to mention central bank digital currencies, or CBDCs. Many countries are exploring the creation of their own digital currencies, and while these are not cryptocurrencies in the traditional sense, they are a sign that governments recognize the power of digital currencies and blockchain technology. As more central banks develop their own digital currencies, Bitcoin's role in the financial ecosystem may evolve, potentially positioning it as a complementary asset or as digital gold in the face of these government-backed alternatives. Now, let's shift gears to a topic that's been on many investors' minds lately: the impact of the upcoming US elections on Bitcoin. Elections can have a profound impact on financial markets, and Bitcoin is no exception. The US is a major player in the global financial system, and policy shifts resulting from elections can either boost or stymie the growth of cryptocurrencies. There are a few key areas where US elections could directly affect Bitcoin. First, there's the issue of regulation. As it stands, the US is still developing its regulatory framework for cryptocurrencies. The outcome of the elections could determine whether we see stricter regulations or more lenient policies. If a new administration or a shift in Congress results in stricter regulations, it could lead to short-term volatility in Bitcoin's price. Conversely, a more crypto-friendly government could pave the way for broader adoption and potentially even more institutional involvement. The next key factor is the broader economic policy that follows the elections. Bitcoin is often seen as a hedge against inflation, and government actions related to fiscal stimulus, interest rates, and monetary policy can have a direct impact on Bitcoin's value. For example, if post-election economic policies lead to more stimulus or loose monetary policy, we could see a surge in Bitcoin prices as investors seek refuge in hard assets like crypto. On the other hand, tighter fiscal policies and higher interest rates might reduce Bitcoin's appeal as a hedge, causing its price to dip. There's also the question of geopolitical risk. Bitcoin, being decentralized, often benefits from political uncertainty. If elections create instability or political gridlock, Bitcoin could be seen as a safe haven, much like gold. Given Bitcoin's global nature, investors across the world might flock to it if they perceive instability in the US financial markets. Finally, there's the potential for changes in tax policy. A new administration might enact changes in how cryptocurrencies are taxed, either making it easier or more difficult for investors to profit from Bitcoin trading. If capital gains taxes on crypto rise, we could see a slowdown in trading activity. On the other hand, more favorable tax policies could encourage even more investment into Bitcoin. So, where is Bitcoin headed in the future? While no one can predict the market with complete accuracy, several trends indicate where Bitcoin and the broader cryptocurrency space could be heading in the next few years. First, Bitcoin is likely to maintain its role as a store of value. As more people see Bitcoin as digital gold, we're likely to see continued demand for Bitcoin as a hedge against inflation and a stable asset in uncertain times. In a world where traditional currencies are subject to the whims of central banks and governments, Bitcoin's limited supply gives it an edge as a reliable store of value. Next, we'll likely see increased adoption of Bitcoin for everyday transactions. While scalability issues have long held Bitcoin back from being a practical currency for day-to-day use, solutions like the Lightning Network and other Layer 2 technologies could change that. If Bitcoin becomes faster and cheaper to use, we might see it gain traction as a medium of exchange, in addition to its current role as a store of value. Additionally, we're likely to witness more government involvement in the crypto space, either through direct regulation or through the creation of central bank digital currencies. Governments might start adopting blockchain technology for financial and other purposes, even if they don't fully embrace decentralized cryptocurrencies like Bitcoin. We can also expect to see continued innovation within the crypto space. Bitcoin's technology, while groundbreaking, is only the beginning. As the industry evolves, we'll likely see new ways for Bitcoin to interact with other systems, whether through DeFi platforms, new blockchain projects, or even traditional financial institutions embracing crypto assets. Lastly, mainstream institutional adoption of Bitcoin is a trend that is unlikely to slow down. Major corporations, banks, and even governments are starting to see Bitcoin as a valuable asset class. As institutional confidence grows, Bitcoin could become a standard feature in many investment portfolios, further solidifying its role in the financial ecosystem. To wrap things up, Bitcoin's journey has been nothing short of revolutionary. From its current state as a volatile yet valuable asset to its broader role in the evolving world of cryptocurrency, Bitcoin is shaping the future of finance. With major trends like DeFi, institutional interest, and upcoming US elections, Bitcoin's path forward is full of potential and uncertainty. But one thing is clear: Bitcoin is here to stay, and its impact on global finance will only grow in the years to come. Thank you for watching. If you found this video helpful, don't forget to like, share, and subscribe for more.